Welcome back to part 5 of our video series on nonprofit organizations using this example question called Mambo to work out so that we can do our bar trading account, our income and expenditure account, our statement of financial position. And we are using this particular question because it has that same concept of markup and margin. And we want you to fully understand how to utilize that concept in single entry accounting and how to convert from one ratio to the other, where you can convert from your markup to a margin or from your margin to a markup. Now, in the previous series, when we did the profit making organization, we converted from margin to markup. And in this series, we are converting from a markup to a margin, so you get both perspectives. In the last video, we were looking at our rent, and we were looking at our rent, $4,200 was paid from prepaid for January to April 2014. And we had to work out the monthly installment for that because it was equal monthly installments. We worked that out. And then we wanted to find out, okay, how much was paid for May to June for those 2 months. And we took the monthly installment and multiplied by 2 to come up with $2,100 for May to June. And the question has stated that from July, the monthly payments increased by 20%. So then we took our monthly payment and increased it by 20% and came up with a new monthly payment of $1,260. And then we used that $1,260 to work out how much was paid for July to December, and we came up with $7,560. After we came up with that $7,560, we decided that we needed to find out the total amount that should be included in our income and expenditure account for the financial year January to December 2014. So we took all the payments for that financial year, the $4,200 that was prepaid previously, the $2,100 for the May to June period, and the $7,560 for the July to December period. And we added those together and we came up with a total payment of $13,860. And this is what we're going to include in our income and expenditure account for our rent expense. But what we need to also find out is how much was prepaid, because remember from our question, it states here that the rent that was paid for the year was $10,000. They said it was $10,000. So that means based on what we calculated, some form of prepayment would have occurred during the year, because this $10,000 here does not include the $4,200, because remember the $4,200 was from a previous year. So they're not looking at what happened the previous year. They're looking at the payment. So this $10,000 here is payment from July. Sorry, this $10,000 here is payment from May to December, because remember the $4,200 was paid previously. So we are only looking at the May. This $10,000 is for the May to December and seems to include something else as well. So we need to find out the extra that was paid during that period, because if we go back to the question and we look at how much cover for the financial year, if we add $2,100 for May to June, and we add the $7,560 for July to December, that cover payments in the current year, that payment is only $9,660. And the question stated that the organization paid $10,000 in rent during the financial year. So if they paid out $10,000 in rent during the financial year, and only $9,660 is covered for May to December, it means that there's extra going forward into the next financial year as a prepayment. So let's do the adjustment, and how we're going to do our rental adjustment. So rent adjustment, this is our rent expense adjustment, and we already worked out how much is going to the income and expenditure account, but we just trying to work backward to find out our prepaid amount. So we're going to start with the rent paid for the period. So rent paid was $10,000, and the rent prepaid, so we're going to add what was prepaid. So add the prepaid rent, because this was not accounted for previously, that is $4,200. And then you will subtract any prepayment. That's what you usually have to do, subtract any prepayment for the period. But obviously, we don't know what that prepayment is, but what is happening here, we know that what we need to transfer to the income and expenditure account is $13,860. So what we are going to do, ordinarily we will subtract the prepayment, but we don't know what that is, so we're going to subtract the amount that's going into the income and expenditure, and I can call that INE for this purposes, income and expenditure, which is $13,860. This is the amount that's going into our income and expenditure account here. So then let's see what the prepaid amount would be. So that would be 10,000 plus 4,200, which will give us 14,200 minus 13,860. And our prepaid rent is $340. So we know the prepaid amount. Okay, so our prepaid rent is $340. Ordinarily, if you had to make an adjustment, this is a very interesting question. Ordinarily, if you were just given an adjustment because you knew what the prepaid was already, you can start with your rent paid of $10,000, add the rent prepaid at the beginning, and subtract the rent prepaid at the end, and you would get the amount for the income and expenditure. But this is out of the ordinary. Okay, so now let's make an adjustment for the next one. We have to adjust is the insurance, because here we have accrued insurance at the beginning and accrued insurance at the end. This is a classic example where we can do our adding and subtracting and come up with what should be going into our income and expenditure account. And then here we have, so this is accrued at the beginning, accrued at the end, and we have what was paid during the year, $7,250. So we're going to start with that $7,250. So let's adjust for our insurance. So insurance adjustment, and we're going to start with insurance paid, and that was the amount paid was $7,250. So that is $7,250. To that, we are going to subtract the accrued insurance at the beginning. So less accrued insurance brought down, which was $800. And then we are going to add the accrued insurance carried down at the end, and that was $650. So we are going to use those figures to come up with what we should include in our income and expenditure account. Okay, so let's see how much we have to put in our income and expenditure account for insurance. So we can start with what we paid, $7,250 minus $800 plus $650, and we get a total of $7,100. So the amount to include in our income and expenditure account for the insurance is $7,100. So I have that highlighted as well. So now we know how much we are going to include in our income and expenditure account for our insurance. So we have the adjustment for that. We also know how much we are going to include for our rent, and we also know how much we are going to include for our subscriptions. So let's now we move on to step 5. And in our step 5, we usually calculate things like allowance for doubtful debts, depreciation, and any other thing that needs to be calculated, we will calculate there. So that's what we are going to be doing at this stage. So let's look at calculating our depreciation and any other thing that needs to be calculated. So let's go back to the question. How do we know we have depreciation? We know we have depreciation because at the beginning of the financial year, my motor vehicle worth $40,000. By the end, it's only worth $31,000. And also for bar equipment, at the beginning, it worth $25,000. At the end, $24,430. During the year, we sold a motor vehicle and we bought bar equipment. So we need to find out what the depreciation is. Okay. So, and then and also the other things that we need to calculate as well is that we know that during the year, they sold some dance tickets and they also had a dance expense. So we're going to find out whether they made a profit or loss from this activity here called dance. And also they would have sold a vehicle and the book value of the vehicle was $5,000, but they sold it for $5,500. So we will see if they made a gain or loss on selling the vehicle, disposing of the vehicle. So those are the things that we are going to be looking at shortly. So let's look first at the dance activity. So let's run this very quickly. We can do that. So dance, holiday dance activity. Let's see if we can make a profit or loss on that activity. They would have sold tickets for $4,300 and they had dance expenses of $6,400. So when you subtract 6,400 from 4,300, you get a negative figure. So you have a loss of $2,100. So this is a loss on the ticket sales. So they made a loss. So we are going to account for that. Also, we recognize that they disposed a vehicle. So let's see if they made a loss or gain on disposal of the vehicle. So disposal of vehicle or sale of vehicle. Let's see if they made a loss or gain. The value of the vehicle was $5,000. They sold the vehicle for $5,500. So $5,500 that they received minus the $5,000 that the vehicle value or worth would give us a gain on the sale of the vehicle of $500. So you have a gain on disposal or a profit on disposal of your vehicle. So at this time, we're going to pause here and we are going to come back in our next video. And what we're going to do is that we're going to calculate the depreciation for our motor vehicles and our bar equipment. And then we're going to start looking at our bar trading profit and loss account. Please like and subscribe.